Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louis, and I'm excited to share today's stories with you. We're starting off with a look at the latest developments in the IPO market. The National Securities Depository Limited, or NSDL, has launched its initial public offering, and it's been making headlines. The company is a pioneer in depository services in India and plays a crucial role in the country's financial market infrastructure. According to reports, the NSDL IPO has seen a decent response from investors so far, with the subscription window open until August 1. The company has set a price band of Rs 760 to Rs 800 per share, and is expected to be listed on the BSE on August 6. But what does this mean for investors? Is NSDL a good bet, or are there concerns that they should be aware of? We'll be taking a closer look at the company's financials and valuation to help you decide. With a revenue growth of 12% year-on-year and a profit after tax rise of 25% YoY, NSDL seems to have a strong track record. However, its dependence on transaction volumes and evolving investor behavior are factors that investors should consider. We'll also be comparing NSDL's valuation with its listed peer, Central Depository Services Ltd., or CDSL, to see how it stacks up. With a price-to-earnings ratio of 46.62x and a price-to-book ratio of 7.98x, NSDL seems to be reasonably priced compared to CDSL. On the other hand, we have the story of Indigo's parent company, Interglobe Aviation, which has reported a significant loss in the June quarter due to high fuel costs and a weak rupee. The company's net loss widened to Rs 1064 crore, compared to a net profit of Rs 12.2 crore in the same period last year. Meanwhile, the IPO of another company, IG Securities, has been subscribed over 23 times on the second day of bidding. The company aims to raise Rs 180 crore through its public issue, which will be used to meet its working capital requirements and repay debts. In other news, the Indian stock market has been seeing a lot of volatility lately, with the Sensex and Nifty indices fluctuating wildly. We'll be taking a closer look at the factors driving this volatility and what it means for investors. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and economics, where experts are weighing in on the current state of the market. Today, we're looking at two different perspectives from Anshul Saigal and Sridhar Sivaram, who shared their insights on the banking and financial sectors. According to Anshul Saigal, there are opportunities for growth in certain areas, such as distribution and retail finance. He believes that these spaces can provide steady returns, despite the current economic uncertainty. On the other hand, Sridhar Sivaram has a more cautious outlook, warning that the large financials may not be able to maintain their high growth rates due to their massive size. Sivaram also discussed the EMS sector, which is showing strong growth and has the potential to become India's auto moment. However, he notes that valuations may be slightly stretched and investors should wait for a dip before entering the market. It's clear that both experts have valid points, and it's essential to consider multiple perspectives when making investment decisions. As we navigate these complex financial landscapes, it's crucial to stay informed and adapt to changing market conditions. Whether you're a seasoned investor or just starting out, it's essential to be aware of the potential risks and opportunities in various sectors. We'll continue to bring you expert analysis and insights to help you make informed decisions. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's episode with a look at some recent market news. I want to bring to your attention a story that caught my eye regarding the National Stock Exchange, or NSE, and their latest quarterly results. According to reports, the NSE posted a consolidated profit after tax of Yado 2,924 crore for the June quarter, which represents a 10% increase from the previous quarter. Their consolidated revenue from operations also saw a 7% growth, reaching 4,032 crore. It's worth noting that these numbers are down 11% compared to the same period last year. The exchange attributed this growth to an increase in volumes across their cash market and derivatives segments. In fact, the average daily traded volume in the cash market segment was up 14% in the June quarter, reaching 1.08542 crore. Now, I know some of you might be thinking, what does this mean for me as an investor? Well, it's essential to consider the broader market context and the potential implications of these results. While the NSE's performance may indicate a positive trend in trading volumes, it's crucial to remember that past performance is not necessarily indicative of future results. As we always say on the Riskwiser Zone, it's essential to approach investing with caution and careful consideration. Make sure you're doing your research, diversifying your portfolio, and not putting all your eggs in one basket. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.